Hello again, I'm Wayne Walker, the Managing Director of Global Capital Market Solutions, GCMS. And in this topic, we'll actually have a look at the difference between what we call technical analysis and fundamental analysis. And this is an area now where there's, let's see, there have been actually quite a bit of debate, particularly with traders, where there's, okay, you know, you can be the technical guy, and then you have the fundamental guy, and everyone's fighting over, well, which one is the best. But let's take them one by one. Let's say technical analysis, meaning that you're using technical analysis studies, for example, moving averages, which helps you to identify the trend. We have other studies, for example, an RSI, which is a relative strength index, to see if things are what we call overbought or oversold, and so on. So these are what we call technical analysis tools or studies. And then on what we call fundamental analysis, this is where now you take into things that are, if we were to take a look at equities, for example, equities meaning, again, stocks, directors trading, let's say the company's market share, what's in the product pipeline, and as, let's say, you know, again, outside of the market share, PE ratio, things like that. So for the guys that are what we call the fundamental traders, they basically stick with this and say, okay, this is the best way to do it. My take and my colleagues' view on this is really that it depends. And when I say it depends, meaning on your time frame. Let's say you're what we call, let's say, a day trader, for example. And when I say day trader, meaning that you open and close your positions or your trades on the same day, or you can go to the extreme, what we call scalping. And let's say a person that would be classified as an extreme scalper, they would have positions open from maybe 1 or 2 seconds, maybe a minute. And with those guys, if you're in this type of aggressive trading, using fundamental analysis of, let's say, market share, product development, that really won't help you that much because your time frame is in actually a couple of seconds. But if we go to the other side, let's say you're in this, again, investment time frame. And when I say investment, meaning that you would want to hold a position or take on trades that will last anywhere from a year out to 2, 3, maybe 5 years, then if you're using that, paying attention to quick or 1-minute charts or technical analysis tools, those aren't really applicable. So it really is not this competition between technical or fundamental. What I say, it really boils down to your time frame. And once you decide what your time frame is, then you will use the tools. So in conclusion, if you have short-term trading, primarily technical analysis, but if you have a longer term, then you're looking more at this, what we call the fundamental analysis, because with your long term, you need more data.